a fishing retreat known as Jackson Hole in the far west of America. It's here in the wilds of Wyoming that central bankers aim to net some ideas on how they'll manage the global economy. And the financial markets are watching.
They do use these speeches to kind of drop hints to the market about future policy moves or maybe a shift in monetary policy direction. But that's really the exception rather than the rule.
European Central Bank President Mario Draghi made a splash at Jackson Hole in 2014 when he laid the foundations for a $2.7 trillion bond buying program to prop up the Eurozone economy. And with that now back on track, Draghi will be closely watched for any hints he's about to start withdrawing that stimulus.
If there was some hint from President Draghi that maybe they were starting to think about tapering, as it's called, perhaps early next year, they've committed more or less to continue with their 60 billion euro monthly purchases until at least the end of this year. So it's really around the second element there, that perhaps a hint that they're getting more confident that they are getting closer to achieving their goal.
But it's the United States that holds the key. It's raised rates twice this year and pledged to reduce the $4.5 trillion stack of bonds on its balance sheet. If Fed Chair Janet Yellen signals a shift in policy, the rest of the world is sure to follow.
Central banks are doing asset purchases is totally unprecedented. We've never seen this before. And this has been playing in the market for the last 10 years. So they don't know, bond yields are very low, and they don't know how much of this is the result of asset purchases. So they're hoping that if they can be transparent and orderly in bringing the balance sheet down, it'll all be very orderly, but no one really knows.
After a decade of low interest rates and trillions of dollars of easy money, the global economy is now at a tipping point.
So the financial world will be paying close attention to these meetings between central bankers that go on here over the next few days here in Jackson Hole to find out which way it might go. Jade Barker, TRT World, Jackson Hole, Wyoming.
For more on this, Chad Morganlander joins us from New Jersey. He's a portfolio manager from Washington Crossing Advisors. Chad, great to have you on the show. What for you are some of the key things we should be looking out for at this year's symposium?
So thank you for having me. Actually, I think that there are going to be two key speeches that will be given. One, Janet Yellen earlier in the day. We believe that signal from her will be one that will be fairly consistent with her previous speeches, as well as announcements that they have made. That we believe that they are going to continue to raise interest rates at a very gradual pace. That's what the signal will be, and that they will reduce the balance sheet in a very consistent manner. And that will all be based off of financial stress, global growth, and she will make that very clear that they will be doing this at a quite glacial pace. The second meeting will be the one that will be the most important. That will be Mario Draghi. He will be speaking later in the day. He will be talking about the connectivity of the globalization of the financial system. We don't believe that he will signal any change in their type of monetary policy. So overall, when you come through this entire weekend, the message will be rather consistent with very little surprise.
Well, as it stands, what do you see as being some of the fundamental challenges facing central banks?
Well, the fundamental challenge is to try to keep the overall global economy and the financial system stable as they readjust monetary policy based off of where global growth trends are. The unfortunate thing about this is that it's quite regionalized. For example, here in the United States, you have a 2% growth level, but it's far less and less consistent than the 3.5% to 4% growth trajectory that historically we in the United States have enjoyed. And inflation trends here are quite low. So the Federal Reserve here has to be able to slowly pivot themselves from being less accommodative without derailing the U.S. Growth story. And when it comes to the overall financial system within Europe as well as within Asia, that's all going to be based off of trends within economic activity, which we believe, even with this highly stimulative posture by the ECB, inflation trends and economic activity will be subpar.
And just in light of recent diplomatic developments between the US, Russia, and China, how will that fit in with fostering a dynamic global economy, which is this year's focus?
So what we're focused on is the actual growth rate of credit within China. I understand that the political aspect hits the front page of the news stories, but the actual growth of credit and growth within China and their policy shifts have very large implications on not only global trade and earnings for companies across the globe, but also inflation and deflationary trends. So as we anticipate that as China's credit creation starts to decelerate, it doesn't have to have a massive dislocation, that will have major implications within global growth. So, for example, if the Chinese catch the sniffles, then you could certainly see an economic cold hit the European Union, because they're contributing from the export side. They get the most benefit from the Chinese growth story.
Chad Morganlander from Washington Crossing Advisors, thank you for your time.